Right. Well, let's talk some practicalities here then. I have your YouTube channel up, and you've just shared that you do like to give people knowledge. I can see clearly on your YouTube channel you are sharing it. But let's dive into some of these things. I'm going to start with Pinterest stock analysis #shorts. Are you willing to discuss whether or not you would recommend somebody invest in that kind of thing, or is it a good investment for them, or is it bad? Like, what do you think there?
Yes, and to clarify, that doesn't mean anybody who does have financial knowledge, that it doesn't mean short selling. I don't short sell ever. I'm gonna have to work on my team with that with that terminology.
I was wondering that too. Okay.
Yeah, that doesn't mean short selling because I don't short sell ever. That was a short video clip. I think like a minute-long video clip based on my longer video clip.
Okay.
I do not recommend short selling. Selling. The reason I do not recommend short selling is because, in theory, you can lose an infinite amount of money. Let's say you invested something at $10 and it goes up to $100. You're on the hook for not only that $90, which it's only a $10 investment, so you're on the hook for 9x what the original investment is. But you have to pay what's called margin on that, which is like an interest rate on your short selling. So it's very, very dangerous.
Okay, let's back up, because this is why I'm glad we're talking today. We're going to pretend like I am not the only person here who doesn't understand any of this stuff, but I might be the only person here who doesn't understand any of this stuff. Just be nice to me. Can you please explain to me what it even means? What is a short sell to begin with? I've heard it on movies and stuff. What the heck is that even?
Yeah, so essentially you're betting against the stock. You're betting that the stock is either going to go down significantly or that it's going to fail. Why would somebody do that? Most bigger investors do that because they think something's wrong with the valuation of the company. They think something's fraudulent and going on at the company, something along those lines. They think something's massively wrong with the company. Why do they do that from an investment perspective?
The new trending video on YouTube.
Nice.
Good to know. Good to know. Thanks,
nice. That's awesome. And you hear banging on my door because
it's okay.
My little one is trying to get into the room, even
we
though
have real life things.
I told them I was on Facebook Live. Apologize for the noise. I'll try to ignore that. Unless somebody's screaming and dying, I think we're good.
Fair enough. So you're betting against the stock market for a short sale. Why would somebody want to do that?
Yes. So they would do that because they think valuation, something's wrong with the company. Why would they do that from an investment perspective?
Right.
Because if you are right, you can make a ton of money.
How?
Have you ever seen the movie The Big Short?
No.
Okay, so that covers the housing crisis and leading up to the financial crash in 2000. I think the time frame of the movie is 2005 to like 2009 time frame. So as the housing bubble was building, people like Michael Burry, who is a great investor, and I can never remember the other guys' names, but there were several people who saw that the housing bubble was unsustainable, and that something bad, like there was the bad stuff with the with the mortgage companies not requiring financial data from the people who are buying homes. They weren't doing proper due diligence, all that stuff. So they saw this data coming in and they shorted the market because they saw this bubble building and that it was unsustainable. And they weren't necessarily betting that this was happening in the sense that they wanted people to get hurt.
Right.
They were doing this so they could profit up. They saw the opportunity and they shorted the stock market to make money off of this because they expected it to crash. When I say money, they made billions of dollars.
How do you do that though? That's what I'm saying. If you invest $10 in one stock and you're expecting to go down, how do you make money on that if it's already a failing company? Or stock, rather.
So, as we saw in the housing bubble, it built up for years, for like 3-4 years. This whole time.
Oh, it's the time I wasn't keeping in mind. So this is a long game prediction, kind of.
Yes.
Now I got it. So you know you're investing in a company maybe that is going to go under. You're betting on it going under. You're going to buy that stock at that price, knowing that due to inflation and the interest probably in the stock market or valuation, I don't know which one of these is right, that stock will continue going up, right, in price. But so now for your $10 that you've invested, you can bring home $100. And I'm just using simple math.
Yes.
But at some point when it does crash, you know that what do you get out of it then, or do you?
Yes, you sell your positions and you get out at that point.
Okay.
The problem with this though, and Michael Burry ran into this, is he saw it coming. He was 100% convinced there was gonna be a major crash. 100% convinced for years.
Okay.
His investors kept getting upset at him because they were losing a lot of money. Because as the housing prices and as the market kept going up, his short positions lost money. So they started taking money out of his fund, and it's called a redemption. So what if they would have kept all their money in, he would have made tens of billions of dollars from this.
Wow. Okay.
I think he only made like hundreds of millions of dollars. Other people made lots more money, but he was 100% correct. The
Wow.
problem with short selling isn't just that. Well, there's a nefarious side too. That's the kind of angel side of things on the short selling. There are other short sellers who will purposely short sell a stock because they want it to crash. Like they want it to go out of business, and they're doing it for nefarious reasons, only so they can make money, even without considering like the employees and stuff like that. I completely disagree I don't like that.
Wait a minute. I think I just figured something out. Is that what comes back then to some of these executives and stuff that are stock owners in their own stock for their own businesses, deliberately driving their company to the ground? Is that where the fraud comes in sometimes?
Sometimes, yeah. I mean, sometimes, and I have a real world example of a company that I've invested in doing this.
Wow.
Dole Food Company. Dole Food Company.
Dole Food.
Years ago, I owned their stock. And I owned their stock because it was massively undervalued. I found $500 to $1 billion worth of hidden assets on their balance sheet in terms of their land that they've owned for like 100 years in Hawaii. So it's ultra valuable land.
Yeah.
Found that on their balance sheet, invested in them, made money, and then the owner, I think he owned most of the company. I think it was like 60-70% of the company, something like that. He started doing some crazy stuff. He started purposely, again, I don't know if it was him or the team or whoever, they at Dole started purposely putting rumors out, and then they would change what they were doing like 2 weeks later, and the stock price would crash.
Wow. Okay.
The reason he was doing this, not because he wanted to short sell the company, he wanted to take the company private at a cheaper valuation so he could make more money.
Is this legal?
It was not.
So
They actually, and the reason I'm saying this is not legal, and that they were actually caught. They actually had to pay, I think, hundreds of millions of dollars in fines for this, because they were found to be manipulating the stock for their own gain. So, yeah, it's crazy.
You look at the reports, you also look at the moral integrity and the character of the people who are running these companies. I never tied that in until just this story. Thank you for that. Makes a lot of sense.
Yes.
Okay. So stocks aren't nameless. Stocks are actually tied to people activity. That's one thing.
Well, and that's a good point, because most people view stocks as piece of paper or just kind of a weird, like random entity that's out there, the corporate entity, LLC, C Corps, whatever.
Yeah.
I view them, when I look at a stock, as I'm becoming a part owner of it.
Interesting.
That's the way I look at investing in any stock. Would I want to buy this stock and become a part owner of this company or this commercial real estate or whatever? Am I 100% comfortable? Not that there are zero risks, not that I'm going to make a lot of money. Am I 100% comfortable joining this or investing in this asset? If I'm not 100% certain, I don't invest in it. And that's some of the other factors, the trust and the metrics and the valuation and some of the other stuff we talked about.
Well, your name is attached to the company now.
Yeah, and that's really what it means. When you own a share of the company, you own XYZ% of the company. For most of us, that's like less than 1/10 of 1% of the company. Yeah. But that's the way I look at the entire company, is am I comfortable becoming an owner of this company? Because that's truly what you are as a shareholder.
Never considered it from that point of view. Never.